Hi guys, today we are going to see Income Tax Officer Exam 2023. Before going into the video, kindly like, comment, share and subscribe for future videos. Question number 1. When an individual is said to be resident and ordinary resident in India under Section 6(6) of Income Tax Act 1961. What is Section 6? An assessee is called as a resident if he has stayed in India for a period of 182 days or more during the previous year, or stayed in India for a period of 60 days or more during the previous year and 365 days or more during the 4 preceding years. He is considered as a non-resident if an individual has been a non-resident in India in 9 out of the 10 previous year during the preceding that year, or during the 7 previous year preceding that year has been in India for a period amounting in all to 729 days or less. So the answer for the question would be answer B. Question number 2. As per exception given under Section 6(1)(a) read with Section 6(6)(d) of Income Tax Act, an individual shall be deemed to be resident but not ordinary resident in India if he satisfies the following condition. So Section 6(1)(a) is an individual being a citizen of India shall be deemed to be resident in India in any previous year if he is not liable to tax in any other country or territory by reason of his domicile or residence or any other criteria of similar nature. So the answer would be C. Only I, 3, 4 are correct. Question number 3. House rent allowance specially granted to an assessee by his employer is accepted under section. So let's look at what are the sections are. Section 10(13) exemption payment from an approved superannuation fund. Section 10(13)(a) deals with the exemption of house rent allowance received by an employee. Section 10(14) exemption of certain special allowances or benefits specifically granted to an employee to meet expenses incurred for the performance of his duties. Section 10(14)(a) deals with the exemption of income received by a taxpayer in the form of subsidies or grants from the government. So the answer would be B. Section 10(13)(a) of the Act. Question number 4. Which of the following are correctly matched as per the provision of IT Act 1961? So let's look at the sections. Section 10(10)(d) any sum received under a life insurance policy. Section 10(10)(bb) exemption of income for certain scientific research associations. Section 10(11)(a) exemption of payments from Suganya Smriti account scheme. Section 10(10)(cc) tax exception on leave travel concession or leave travel allowance received by an employee from their employer. So the answer would be D. Only I and 3 are correct. Question number 5. The forms and modes of investing or depositing the money as per section 11(5) of the Act does not include. Answer would be B. Deposit in any account with any bank situated in India. Question number 6. Which of the following statements are correct as per the provision of IT Act 1961? So what is section 11(5)? 11(5) specifies the forms and modes of investing or depositing money for income derived from property held under trust only for charitable or religious purposes. So in this case the answer would be C. Both A, B are correct. Question number 7. As per section 11(2) of IT Act, where 85% of income is not applied to charitable or religious purpose by the trust, such income so accumulated or set apart will not be included in the total income of the trust if the following conditions are satisfied. Such trust will have to specify by means of notice to the AO in form number 10 the purpose and period for which the income is accumulated or set apart. The above notice in form number 10 should be uploaded electronically on or before due date of submission of return of income under section 139(1). However, if form number 10 is not uploaded before this date, even then the benefit of accumulation will be available and such income will not be treated as taxable. So the correct answer would be A. Only A is correct. Question number 8. For the purpose of section 9, technical services do not include. So what is section 9? Section 9 deals with income deemed to occur or arise in India. The term technical services refers to certain services provided in connection with the rendering of technical or consultancy services. So in this case, the answer would be A. Consideration for any construction services. Question number 9. Salary paid by an Indian company to its employees working in one of its branches outside India is C. Salary occurring in India. Question number 10. Which are the correct statements in respect of expenditure on in-house research or development facility? A. Section 35(2)(ab) provides for a deduction in respect of expenditure on in-house research and development facility. This deduction is allowable to all types of assessee in IT Act. The entity should be engaged in business of biotechnology or in any business of manufacture or production of any article or thing except those specified in 11th schedule. So the answer would be C. Only A and C are correct. Question number 11. Shaurya, manager of XYZ Limited since 2004, was terminated by the company on 1st August 2018 by paying a compensation of Rs 200 lakh. Such compensation is, the answer would be D. Chargeable under section 28(2)(a). Question number 12. A property is owned by co-owners and it is self-occupied house property. In this case, interest on money borrowed after 1/4/1999 for acquiring the house shall be allowed. So, in this case, if the property is owned jointly by co-owners, each co-owner is eligible to claim a deduction for the interest portion of the housing loan repaid by them, subject to the overall limit specified under section 24B, that is Rs 2 lakhs. So the answer would be to each co-owner to the extent of Rs 2 lakhs as the case may be. Question number 13. In the case of companies, capital expenditure incurred for the purpose of promoting family planning amongst the employees would be deductible to the extent of, the answer would be A, equal to 1/5 in each year for 5 years. Question number 14. What is the amount of deduction in relation to tea, coffee and rubber business under section 33AB of the IT Act? What is section 33AB? Section 33AB aims to incentivize investments in the tea, coffee and rubber cultivation sectors by providing a special deduction for capital expenditure incurred for specified purposes. So the answer would be 40% of profits of such businesses. Question number 15. SS Construction Limited has paid Rs 20 lakhs to an approved college to be used for scientific research unrelated to its business. The amount eligible for deduction under section 35(1)(2) is, what is section 35(1)(2)? 35(1)(2) allows for a deduction of payments made to approved institutions for scientific research unrelated to the business of the company, and there is no specified limit on the deduction amount. Therefore, the entire payment of Rs 20 lakhs made by SS Construction Limited would be eligible for deduction under this provision. So the answer would be C, Rs 20 lakhs. Question number 16. Which is the correct statement in respect of capital gain on slum sale as per IT Act 1961? The answer would be always long-term capital gain. Question number 17. Cost of acquisition of self-generated asset is nil. The exception is, answer would be C, bonus shares acquired before 1/4/2001. Question number 18. As per section 47(13) of IT Act, the transfer of capital asset is not taken as transfer if the following conditions are satisfied. So as per the following conditions, the answer would be B and E are incorrect. Question number 19. The benefit of indexation is not available in the following cases. Even such asset is a long-term capital asset. So in this case, the answer would be D, all of the above. Question number 20. Which are the correct statements in respect of computation of capital gain in the case of compulsory acquisition of an asset under section 45(5) of IT Act? So what is section 45(5)? 45(5) ensures that capital gains arising from the compulsory acquisition of assets are subject to taxation in the hands of the taxpayer. Capital gain is taxable in the first year in which the initial compensation first received. So the answer would be B and D are correct. Question number 21. Which of the following are correctly matched as per the provisions of IT Act 1961? So what are the sections? Section 54. Section 54 is applied to individual and HUF. Section 54B is individual and HUF. Section 54D applies to any person. Section 54EC applies to any person. Section 54F applies to individual or HUF. So the answer for this question would be D. Only I, 4 and 5 are correct. Question number 22. In which of the following transfers the benefit of indexation is available in the case the asset is a long-term capital asset? So indexation benefit is not available for computing long-term capital gains earned by foreign institutional investors from specified securities, slum sale and transfer of shares in an Indian company purchased in foreign currency by a non-resident. So the answer would be D, none of the above. Question number 23. Which of the following are correctly matched as per the provision of IT Act 1961? So let's see the sections. What is section 54GA? 54GA provides tax exception on capital gains arising from the transfer of capital assets in cases where the transfer is made due to shifting an industrial undertaking from an urban area to a special economic zone. Section 54G provides tax relief on capital gains arising from the transfer of assets when an industrial undertaking is shifted from an urban area to a rural area. Section 54D applies to capital gains arising from the compulsory acquisition of land and building that are used for the purpose of an industrial undertaking. Section 54EC provides tax relief on long-term capital gains arising from the transfer of certain capital assets. So the answer would be none of the above. Question number 24. Which expenses is deductible in computing the income under the head income from other sources? So the answer would be C. Any expenditure incurred wholly and exclusively for the purpose of making or earning such income. Question number 25. Winning from lotteries, crossword puzzles, horse races and other races, card game, etc. are casual income and hence fully taxable. Question number 26. Substantial interest for the purpose of clubbing provision under section 64(1)(2) shall be of. So what is 64(1)(2)? 64(1)(2) is the provision of clubbing of income applies when a transfer of an asset is made by an individual to his or her spouse directly or indirectly. Here the term substantial interest refers to the ownership or control of a significant portion of the share capital or voting rights in a company. So the answer would be B. The individual and his spouse taken together. Question number 26. 27. Amendment in section 68 by Finance Bill 2022 with effect from 1/4/2023 about source of source applies to. The introduction of the source of source concept allows to delve deeper into the chain of transactions to ascertain the legitimacy of the funds, thereby preventing tax evasion and money laundering activities. It applies only to those companies in which public are substantially interested or not substantially interested. So the answer would be C. Only those companies in which public are not substantially interested. Question number 28. Consider the following two statements. So here section 70 and section 71 is given. So what is section 70? Section 70 deals with set-off of loss from one source against income from another source under same head of income. Section 71 set-off of loss from one head against income from another head. So the answer would be neither statement 1 nor statement 2 is correct. Question number 29. Consider the following three statements. Losses under the capital gain is dealt in section 74. Carry forward and set off of loss from head income from house property is dealt in section 71B. Carry forward and set off of business loss has been the subject matter of section 70. So here, losses under the head capital gain is dealt in section 74 and carry forward and set off loss from the head income from house property is dealt in section 71B. So the answer would be only statements 1 and 2 are correct. Question number 30. As per section 72 of Income Tax Act 1961, unabsorbed business loss can be carried forward for. So as per section 72, unabsorbed business losses can be carried forward for up to 8 assessment years immediately succeeding the assessment year in which the loss was incurred. So the answer would be D, none of the above. Question number 31. Deduction in respect of purchase of electrical vehicle is mentioned in which section of Income Tax Act 1961? So, deduction in respect of purchase of an electrical vehicle is mentioned in section 80 EEB of the IT Act 1961. This section allows individual taxpayers to claim a deduction of up to rupees 1.5 lakh on the interest paid on loans taken for the purchase of electrical vehicle. So, the answer would be answer C, section 80 EEB. Question number 32. Where an assessee has not excised the option under 115 BAC, the quantum of deduction allowed under section 80 U is the quantum of deduction under section 80 U is fixed for a person with a disability. The deduction is rupees 75,000, and for a person with severe disability, the deduction is rupees 1,25,000. So the answer would be B. Thank you for watching the video. If you like the video, kindly share it with your friends and colleagues. All the best for your exams.